as we start covering more of emerging market investing, it's very, very important to understand how the petrodollar system works and the Eurodollar system. Now, we already covered how the Eurodollar system works. In this video, I want to really focus on the petrodollar system, just in the basics. We can do a more in-depth analysis. If you want to see that, let me know in the comments. But this video will basically just be a quick version, everything you need to know about the petrodollar system to really understand how you should invest based on this, what other countries are currently doing about it, and really just everything you know in general. So just to recap on the Eurodollar system, understanding that Eurodollars are not European dollars, so they're not US dollars in Europe. It's really the whole global market of US dollars outside domestic market. So you have the United States of America. Any US dollars circulating basically outside of the United States is considered not a petrodollar, rather a Eurodollar. Okay, so it's kind of a strange name, but you can watch our video on that. We recently recorded that. It's just called Eurodollar System Explained. But this is really going to focus on the petrodollar system. So one of the things you need to understand going into this is most people think the majority of US dollars are held in the United States, so domestically. And again, the reason the Eurodollar system is interesting is because you have higher interest rates actually outside of the US. There's a lot of different advantages you can do with this. For example, like Panama, you can have a very, very nice like 3 to 4% interest rate at your bank account, or in the United States you're getting less than a penny. Like there's that term pennies on the dollar. It's less than pennies on the dollar for the banks. So the banks are just profiting off deposits. That's for a whole nother video. We talked about full versus fractional reserve banking. You can go watch that one as well. But really to dive into this, you have to understand that over 70% of $100 bills, physical $100 bills, US dollars, are held outside of the US. So how does this work and why is it that way? Well, first you have to understand the Bretton Woods system. We recorded a video on this. I apologize for saying we recorded a video on all these different things. It just, some of these things take a little bit too long to understand, or to explain rather. So I just recommend you go watch those. Essentially, Bretton Woods is this conference where essentially currencies, fiat currencies, used to be backed off gold. Okay, so paper notes were basically a representation of you held like one piece of gold for one piece of paper note. That's just an easy way to explain it. Obviously, there's fractions off that, but an easy way to understand it is like, okay, so a bank held like a piece of gold. You had a dollar representing that gold. Now you could break that dollar into multiple pieces. Those would be like individual dollar bills. And based on those you could spend. But again, it all referred back to this. So it was actually a currency backed in gold. But when we took the dollar off the gold standard and we put it on the standard where, okay, the US dollar is a global reserve currency, and then Nixon took the dollar off the gold backing, this was a very, very interesting situation because the US dollar is still the global reserve currency, but it has no backing. There's really no limited supply. It's completely inflationary system, and especially, you know, with last year seeing over 20% of US dollars ever in circulation be created last year, this is not the best situation. So how the petrodollar system works is in the 70s, there was essentially this oil crisis. So with this, there was rising prices in oil, and there's all these different countries competing for, you know, purchasing oil. You know, India wants oil, Russia wants oil, China wants oil, all these different countries want oil. And the United States, being kind of this global reserve currency status at the time, what they ended up doing was saying, hey, we're going to start this petrodollar system. So all oil that gets sold, no matter if, it doesn't matter if you're selling it between the United States and India or the United States and Saudi Arabia, if you're Russia and India trading oil, it has to be done in US dollars. So that's the whole petrodollar system, and it's quite interesting. You know, what this basically set up was this situation where, yes, okay, so it's a bit more stable as far as price goes. You know, it's not like you're having, for example, like I'm currently here in Istanbul, Turkey, like the lira has been devalued. So instead of having like all these currencies that are much more fluctuating, that are not the global reserve status, you have the one that is being traded for oil only. That's like the standard. And for that, it went on a very long time. There was another oil crisis in the 2000s, and it persisted then. But currently now what we're seeing is this situation where countries are going, hey, we're not going to do this anymore. And this is the rise of, you know, for example, Russia and India are actually not participating in this very much anymore. What they're kind of doing is like, hey, we're going to make this agreement without the United States involved, because right now the United States isn't looking so strong. You know, yes, they have the strongest military, but when it comes to things like this, like different sanctions that they make, this like the petrodollar system, these things started in the 70s. Okay, so we're in 2021. This is it's been 50 years. I mean, like, we need to innovate, and I think this is good for countries to do. I think something like a different global reserve currency would be interesting, something that's not owned by one individual nations. This has been talked about for, let's see, who talked about this? Keynes. Oh, John Maynard Keynes talked about this. Like Keynes and Nixon were the ones that started this, but Keynes talked about kind of this like basket of certain currencies. So you would kind of average all the major currencies together, and it would be a basket of currencies. That's what you would base these things off of. That's what you would like base the petrodollar system off of. So it would almost be like an individual currency. And it's interesting because we talk a lot about cryptocurrency and blockchain on this channel, and with this blockchain is pretty interesting because basically it provides this system where nobody owns it. Okay, so everything's on a public ledger, nobody can really alter it, and it's completely open source, so anyone can see it at any time. And it basically provides a stable platform that anyone can use. It doesn't matter where you live, it doesn't matter how old you are, it doesn't matter how much money you have in your bank account, anyone can use it the same way. It's literally the definition of a free market. So we call the current situation a free market, but really it's manipulated by things like the Eurodollar system, the petrodollar system, and all these different things going on behind the curtains. And it's quite interesting to look at. So let me know in the comments what you think about the petrodollar system. If you think, blockchain and cryptocurrency could kind of help innovate this space, maybe having a stable coin specifically for oil. And a lot of people think like, I don't think we're going back to the gold standard. I don't think this idea of like the Bitcoin standard is necessarily going to happen within the next 5-10 years. It could, we'll see how it plays out. Anything can happen. I mean, you have to gauge probabilities, but overall it's a very, very interesting debate. Let me know in the comments what you thought about this. Thanks for watching, and until next time.